This is the February 5 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Matt Bennett. He is with agmarket.net. Greg Johnson is with TGM at Total Grain Marketing. And Sherman Newlin is with us from Risk Management Commodities, a division of Zaner Ag Hedge. Commodity Week, of course, is a production of Illinois Public Media. It's public radio for the farming world, online on demand anytime you'd like to listen to us at willag.org, where today you may purchase your tickets for the All Ag Outlook. That's coming up on Tuesday, March the 3rd at the Beef House in Covington, Indiana. We have a fantastic day for you. I know you've been under a lot of financial pressure, some stress. We're going to take up just the basics. We'll have a commodity panel on soybeans, one on corn. The analysts you hear from WILL regularly will be with us. The farmdoc team will be there to take up competition from South America. We'll also have on hand Gary Schnicke to talk about the crop insurance decisions that you still can make at that point or change even. There have been a lot of changes with crop insurance. Those came in the One Big Beautiful Bill Act last year. And we'll have on hand to talk about weeds Aaron Hager, crop scientist from the University of Illinois. Aaron will discuss some of the issues you clearly will be facing in the field this year. The basics at the All Ag Outlook this year on Tuesday, March the 3rd at the Beef House. The cost, again, only $40. Just $40 includes your Beef House cinnamon roll and coffee in the morning and that lunch at the noon hour. Check out the details online. Register today at willag.org. Now let's get some information from each of you about the things we should take up for the day. Sherman Newlin, let's start with you. We've had a couple of days that were up in the marketplace, but what do you really want to talk about today?
I mean, I think you have to talk about the days we've had up, and the reasons being, the talk yesterday of Trump, talking to Xi about, importing more soybeans. And I think today you had a carryover through with some more news of maybe a change in China's ag policy for this coming year. And I think that's been a big driver. And then, I don't know, I think producers are, looking at ways to cut costs. That may be something to talk about here as well.
Greg Johnson from TGM, Total Grain Marketing, what's on your list?
Well, in addition to what Sherwin talked about, I think we want to remember that we do have a monthly supply and demand report from the USDA next week. I know traders aren't expecting any big changes, but I still think that's something that probably needs to be revisited.
And then Matt Bennett from agmarket.net.
Yeah, I think they've covered pretty much what we want to talk about as far as what's going on this week. Of course, producers are trying to figure out what to do with old crop corn and beans, as well as, maybe leg into some stuff on new crop. And phones have been ringing, I'm sure, for these guys, just like they have with me the last 3 days. So kind of want to go over maybe what some producers ought to be thinking about.
So Greg Johnson, let's start with you and the World Ag Supply and Demand estimates that are due out on Tuesday of next week at 11 a.m. Central Time. February is, generally speaking, not one of the months that we worry too much about. There are no crop production numbers of value for corn, soybeans that come out usually, because they don't get changed. Though I did see some think about possibilities of changes in USDA's exports for soybeans. I suppose USDA doesn't change it until we have a written agreement. I can't imagine that'll be the case. That would have to do with some of the moves this week. What are you thinking about next week's WASDE?
Exactly. I think that's the number to look at, is the soybean export number. Last month, as you remember, they increased increased the carryout from 290 to 350 because they lowered the exports from 1.63 to 1.57. They probably would have lowered the exports again at some point in time here in the future, because that probably still was an optimistic number until the Chinese rumors started a couple of days ago. So probably they'll keep that number unchanged at this point, like you said, until there's something definitive that they have to go off of to change it. But I think we still want to keep in mind the big picture that We still have a 350 million bushel carryout unless you really believe that China's going to buy all the beans that President Trump tweeted. And again, if you read the tweet, it says that they're considering. He asked them to buy more beans, and they said they would consider it. Well, is considering it and actually buying, is that the same thing? I guess we'll find out. It certainly introduces another level of uncertainty, because if they really would buy another 8 million metric tons, that's almost 400 million bushels, and our carryout's only 350. So obviously we would have to go into ration mode. So, could we go to $12? Yes, if the Chinese follow through with as optimistically as what Trump is saying. But if not, you have to keep in mind that South American beans are probably 80 cents to $1 a bushel cheaper than what the U.S. beans are. So from a strictly economic point of view, China really shouldn't or wouldn't need to buy U.S. beans, but maybe they'll do that for some other reason, like a political reason.
Sherman, I oftentimes will consider buying a different pickup truck, but I never do. So I'm wondering, Sherman, whether you think there will be enough in the outside part of negotiations with the Trump administration that they would really look into purchasing an extra 8 million metric tons in this marketing year.
Right. Yeah, I mean, right. You don't know. I mean, I think we're going to have to see some actual, sales eventually, hit the books and get shipped out for the market to continue sharply higher. But, I don't know if everybody saw it, but today the StoneX put out, in their newsletter, something that China released called #1 document for 2026, and it outlines their ag program or their programs for this coming year. And there's been a change in policy to where it's a big policy shift. They're wanting to import more ag products. And then it goes on to say, especially from the United States. Now, that doesn't mean it's going to necessarily be soybeans, because like everybody says, it maybe doesn't make sense for them to import beans, but maybe that means some corn, maybe that means some wheat. And I think that was some of the reason you saw the push today, because that kind of information is new. It's a change in a government policy, and I learned a long time ago, whether it's our government or their government, when there's a policy shift in the government, you better take notice. Because that could really change the dynamics of things, especially, if we start to see some sort of weather problem here in the U.S. or something like that. So, we'll have to wait and see. But funds are short corn, funds are short wheat. It may change that positioning to where they want to maybe not be quite as short as they have been or thought they may need to be going into the future.
Okay, so Matt Bennett, when you take all of this into consideration, you wanted to discuss some possibilities that producers might have related to the couple of days that we've had in the up move. And of course, most people will hear this probably on Friday afternoon after the close of the marketplace. Those numbers are not into the discussion you and I are having at this point. Is there an opportunity for producers for corn and or soybean?
Whenever you look at beans over the course of the last couple of days, you've seen prices that, we haven't seen in quite some time. You just look, for instance, at March beans. The last time we saw a price like this was, December, I believe around December the 7th, 8th, somewhere in there. And so with that being the case, obviously someone who's been sitting on cash beans might consider rewarding the market, with a few bushels. Now, like Greg said, this thing could get really interesting if they do go ahead and buy some of these beans. Now, we got to remember, though, that the fundamental outlook from a global standpoint doesn't change really at all, just because they're buying some beans off of us instead of someone else. Now, it tightens up our balance sheet. It gives us an opportunity to probably have the funds maybe reestablish some of their long positions, but I wouldn't get bullish after a really strong rally. I think that's a trap we fall into a lot of times in the case of beans. You look at new crop beans, of course, you're pushing up on $11. First time we've seen that here, in a while. We actually got over $11 on new crop beans there yesterday, basis the board. And so, again, the last time you saw prices like that would have been earlier in December. And so, I at least want to respect that. And then in the case of corn, we've kind of come along for the ride, if you will. You got December corn back over 460. I mean, it seems like it's a yeoman's task just to move 10 cents or so. But we can't forget, after that January report, we dipped down to that 445 level. And, it's, 15 cents means a lot to a grower. So cash corn, same type of thing. My personal opinion, Greg is in the cash grain business, but clearly, whenever you rally this time of year, it's pretty hard to hold on to all of that because basis is typically going to widen out a little bit. I know that we've heard there's a lot of cash grain movement, a lot of hedging going on with some of the elevators the JSA side works with yesterday and today. If I was sitting on cash bushels and had to move them, I've got to consider what the producer might do heading into March, contract expiring. I'm not sure that everyone's going to want to play the roll game again. It didn't work out that great last year, so I'm not so sure that we won't see a lot of bushels come. If you look at that commitment to traders report, commercial has not bought a lot of corn here yet, so the producer's sitting on a ton of corn.
Greg, I'll step into this because the basis and the cash side of this marketplace is your expertise. What are you watching and what should producers be thinking?
Matt hit it right on the head. We have seen an increase in farmer selling of both old crop corn and soybeans, probably a little bit heavier in the soybeans since that's where we've had the 50-cent move, whereas corn has had like a nickel move. But there's a ton of, I think farmers are still undersold historic compared to historicals. So they're using this rally as an opportunity to make some catch-up sales. And I think that's exactly what they should be doing on soybeans. And the one thing we haven't talked about yet, but, farmers say, well, $11, it's an okay price. Well, number one, it's better than what we've seen for quite some time. And number two, $11 from the marketplace plus 44 cents from the bridge payment plus maybe 60 cents from the Ark County payment, even though that doesn't come until October, November, that all adds up to $1. And so you can turn $11 cash sales into $12 beans pretty easily. And I think, again, unless you really think China's going to come in and buy those beans from us, and as Matt said, even if they do buy some from us, that just means some other country that was going to buy from us may turn around and buy them from Brazil. So does it really affect the overall supply and demand? I think $11 is something that needs to be sold.
Okay, so Sherman, that brings us back to the move this week, and I'm wondering, given the 50-cent move and the idea that even if China were to turn its attention to the United States, potentially buy higher priced beans from us than other places, because it's quite likely that our beans will be higher priced, particularly at this time of year as opposed to in the fall for us. How much differential do you, because it would be hard to calculate, but how much differential do you think there is in the marketplace? Or put another way, have we rallied enough? And if they actually start to buy, how much do you think we rally?
Yeah, that's a good question, Todd. I mean, when we thought they were going to buy, 12 million metric tons, I mean, we rallied this market up to 1160. Now there's the potential, again, I think, we need to see, some sales to come through. That hasn't happened yet, obviously. But I mean, if they would buy, say the 8 million metric tons, I mean, you can look at some different scenarios where our carryout gets really tight. And it's not overly burdensome now at this point. But overall, I think we could go higher if you do see, some buying come in. Do we go? I think you could go back up to that 1160 mark. I mean, that seems like a technical, obvious spot for the market to gravitate to, and then kind of maybe see what happens. I do expect the market to sell off some because, like Greg and Matt said, I think there's been some farmers selling, and rightfully so, to take advantage of this. So I think it's just, kind of a wait and see game. Again, I think that if they follow through with this change of policy, that's going to be interesting. I mean, I think we'll just, that could move the needle enough to get the market to cover more shorts, like I said earlier, to get the market going a little bit more yet. But I don't know, time will tell. I mean, recently we've seen a huge sell off in the metals. You're seeing a big sell off in the equities market. Is it time for money flow to start coming back into some of these ag commodities? I mean, funds are already long beans. Could they get, more length? It's definitely possible. But it's just something, we're just going to have to watch on a everyday basis. I know cash flow is, needed. Guys are making sales. So maybe some re-ownership strategies wouldn't be the worst thing in the world to look at if you do make some sales up through here.
Matt, what is Brian Splitt, your technician, telling you about what he sees in the charts at this point? I think there are some interesting things, at least in the weekly chart, as it's related to potential outside up weeks, old and new crop corn and soybeans both, if I'm reading that correctly. We have Friday's trade to go, but what is Brian telling you?
Yeah, I mean, you definitely see an outside up week. There's no question that from a technical standpoint, you look at beans, not only do you see that, but I mean, you've established yourself, you opened and closed above all moving averages here today, on your front month March, which is certainly notable. You look over at corn, and really, whether you're talking old or new corn, you really have a nice uptrend, that has established itself. Granted, we just absolutely, that bar on the day of the report is an ugly bar. It'd be nice if we could just remove that thing, but unfortunately we can't. So, you're just trying to claw back, but I mean, you're still on corn. You're below everything but the 5 and 10 day, and so you're trying to get back up into that level, up around 440. If you could get up there and establish yourself above it, there's no doubt that you could see some buying on the surface. I mean, when I look over at corn, it's a little different story, than what it is with soybeans. I mean, obviously, from a world standpoint, this huge Brazilian crop's kind of hanging over our head. A lot of people have already called for a huge Brazilian crop on corn, but I mean, shoot, it hadn't even got planted yet. So, you look at world stocks and supply and demand, and you're actually not building world stocks, and that's after just an absolute massive U.S. corn crop this year. So I have to think, that if Sherman's right, maybe some money flow would come in. I think part of the reason money flow hasn't come into ags yet is they really haven't had a story to buy. But I'll tell you what, if you would start to disrupt world production anywhere, given the fact that, again, we're not building world stocks with huge crops, I've got to think that that'd be a place that they might want to park some money and just kind of wait and see, throw some weather premium in this market and see if we can get this market to rally a little bit. And I'm talking more new crop than old, because there's no doubt whenever you have record world and U.S. demand for corn, it necessitates you have huge production. So I do think that's going to be watched pretty closely.
Okay, Sherman, I'd like you to turn your attention to South America, weather that has been happening there. It's been dry, actually, in Argentina, though if you look out, there may be some weather, rainfall on the horizon. Has it been dry enough to damage the crop, do you suppose?
I think it has, in Argentina. I think I saw somebody say maybe 1 million metric tons for corn or beans, either one. But I think the size of the Brazilian crop that's coming. I mean, we've got some folks down there now on a little tour, and they were in a field, and they said the field was averaging 92 bushel the acre. So that's really good yield. So I think whatever Argentina may lose, unless these forecasts don't come forth and bring the rain that Argentina needs, I think the size of the Brazilian crop will more than make up for whatever Argentina might lose. But it doesn't, whatever they lose is definitely not helping the balance sheet, especially if it's in corn.
I do have to ask, Greg, how much hedge pressure do you see in the marketplace when soybeans start to move and be harvested in Brazil? And how much of a delay, and I think there is one, from harvest time to the time it really starts to arrive at port and the hedge pressure begins?
It depends on really whether we just have our normal 5 to 8 million bushel weekly export sales, or if we can do something, something in the double digits. But yes, Brazil does take away our market, starting basically around the 1st of March is when we see exports drop. We still have demand here. We still have domestic demand. So I don't know that we'll see a big basis drop. We typically don't see a big drop, maybe a slight drop historically. I think really what's going on now is we're, just because of the run up in the futures price, farmers are taking advantage of this. We're seeing the basis weaken anywhere from 5 to 10 cents this week just because of the farmer movement. That's not really attributed to the South American crop yet. And again, like I say, when we get to the South American crop harvest in March and they start replacing some of our export sales, we could see that our basis historically drop by 5 cents or so. But I don't think that's a big move. I think that's just part of it. The bigger move, obviously, is the future side of it.
Okay, Matt, the one thing we have not talked about just yet, and there are many ways for grain to move domestically from our part of the world, it oftentimes is through the river system, the Illinois and the Mississippi, of course. The upper Mississippi should be closed by now, I would think. The lower Mississippi actually is really low as well. How much of an issue are one or either of those things during the winter months?
Yeah, I mean, the problem, of course, with the Mississippi is that barge freight is going to have to increase somewhat. It's just going to be tough, with the kind of draft levels we've got right now to be able to float full barges all the way down the river. So you can't load a barge in totality like you'd like to, and so, this snowfall that we had through the region here over the last couple of weeks, you would think it would help a little bit. It helped a little initially, but of course, it's not like we've got a whole lot of water moving by any means. It's been cold enough that we haven't seen much melt, and quite frankly, it just doesn't amount to enough to really get that river system replenished. And so it's going to be a problem. I think you look at the Midwest, I mean, you've got a pretty significant amount of issues whenever it comes to moisture. I mean, we've got some massive deficits. And so, I think that not only the river that I'm worried about, but just simply, if you go into, a growing season without subsoil moisture, obviously we'd like to have a dry spring, be able to get the crop in the ground up and going. But at the same time, we need some moisture, and we need it here over the next few weeks because as dry as it is, Todd, I'm assuming there'll be a fair amount of beans planted, in our part of the world in the month of March if it warms up a little bit. Obviously, it's too frozen right now to even consider it, but if you're able to thaw out without any more moisture than what we currently have, there'll be guys rolling within 6-7 weeks. So, with that being the case, I think we're going to have to get some moisture here pretty quick.
So, Sherman, you're a bit south, I think, of where Matt is located, and of course to the east. You had a rough year last year, really wet to begin with. How dry are you in your area?
We're really dry. I mean, the drought monitor map came out again today. I mean, nothing's really changed. I mean, there's a big red spot, just north of us. But yeah, we've got some topsoil moisture, but our subsoil, we've been taking out some trees before the weather got bad and ground froze, but underneath those trees, it was completely dry. So yeah, Matt's right. I mean, we'll need some rain. Hopefully we don't get as wet as we were last spring, because some guys got pushed back to late June before they got anything planted. So we don't want to see that kind of moisture come in, as we get towards planting time. But we're going to need some, as the year progresses. It's not going to take much to, for the drought to rear its head again as we get on into the summer if we don't.
And when he says north, that's us, Greg.
Yes.
Johnson here. You can comment on that if you want. I'd also like to know after that comment what you think about 45Z and the changes, the announcements that came this week.
Yeah. As far as the weather is concerned, Champaign is the bullseye of the drought. Last year we had 25 inches. The Illinois State Water Survey reported in Champaign. Normally we get 41. So we finished the year 16 inches below normal. And the only 2 years in Champaign that were drier than last year was 1892 and 1895. So this was the driest year in 130 years. So the point is, how did we have such a good crop? Well, because we got 10 of those inches during the growing season. And so with the good soils and just timely rains, we were able to pull a rabbit out of our hat. But my point is, we are going into this coming year with no subsoil moisture. Last year we went in with some subsoil moisture, so we could miss a rain here or there. I'm not sure we can miss a whole lot of rains this coming year with very little subsoil moisture. And again, that's Champaign. I mean, we are the worst. The northern third of Illinois is in good shape. The west of the Mississippi River is in pretty good shape. So, not everyone's in this boat, but it's certainly something to keep an eye on. As far as 45Z is concerned, I've always said the devil is in the details. I mean, we don't know all the details yet. It certainly is on the surface, it's somewhat friendly. I don't know that I would call it bullish. It just feels like the administration continues to want to walk that tightrope between pleasing big ag and pleasing big oil, and they end up pleasing neither one. And so I don't think we want to expect a silver bullet to come out of this. Like I say, I think it's a little friendly at this point. Maybe longer term, once we get some more details, maybe it helps. But in the short run, I wouldn't, base my marketing program off of the 45Z program.
Well, let's get a final word now from each of you. I'll start with Sherman Newlin. He's at Risk Management Commodities. That's a division of Zaner Ag Hedge in Hudsonville, Illinois. Sherman, what's your final word today?
We talked about basis a little bit. Basis in our area has continued to improve on corn since the report in January, so that's not bad. I think if you can get some rallies, like we've talked about in this old crop, corn and soybeans, I think you need to take advantage of it. Guys need to push this grain out the door to meet cash flow needs. Again, I think, maybe reowning some things with calls may be warranted going forward. And then as far as new crop, we got to see what the acreage mix is going to be. I'm not overly excited about making cash sales where we are right now. I mean, you give me a 480 December price and maybe an 1150 November bean price, I might get a little bit more interested. And I think that could happen. So I'm kind of on the sidelines and standing pat as far as new crop sales go.
Matt Bennett from agmarket.net in Windsor, Illinois. Your final word?
Yeah, I just want to be cautious as to ignore a rally. I appreciate some of what Sherman said there as well. I think a lot of growers, especially holding on to significant chunks of old crop, need to understand how much better position we're in than we were just 3 days ago. I think on new crop, anything I do, I want to have some flexibility in it. I do think that there could be some fireworks finally this year, just given the demand situation. But at the same time, I don't think it's a bad idea to step into making some incremental sales if we can get to a level that the grower knows they can make money, at reasonable yields. The same type of yields they're given to their banker for a cash flow. So by all means, I want to stay flexible, but I want to respect this rally.
And finally, Greg Johnson from TGM. That's Total Grain Marketing in Champaign, Illinois.
I think this 50-cent bean rally has given farmers an opportunity to get some sales made at profitable levels, especially when you throw in the government money on top of that. Corn, I could very well see corn going sideways for the next 2 months until we get to the March 31st acreage report. So you have to ask yourself, how long do you want to hold on to old crop corn, especially if you're paying DP or storage charges, and especially if you're paying interest. That makes a difference. For new crop corn, you're not paying DP or storage charges yet, and there's no interest charge. So I think you can afford to be patient on new crop corn and wait for a smaller acreage number. Maybe we'll talk about some dry weather problems and get to that 475 level on December corn. So a little bit different between old and new. It's pretty easy to be patient, I think, on new crop corn sales. Old crop, it just depends how long you want to hold on and wait for a potential rally.
Commodity Week, of course, is a production of Illinois Public Media. You may listen to the whole of the program anytime you'd like. Our thanks go to Matt Bennett at agmarket.net, Greg Johnson from TGM, and Sherman Newlin at Risk Management Commodities. Commodity Week can be found at willag.org. I'm Illinois Extension's Todd Gleason.